This is a video to include some of the subject areas that we were not able to cover in our class time from our February 13th class. So the first thing we're going to do is go over the remaining questions regarding internal controls over sales and receivables. So let's go ahead and take a look at the first question we were not able to cover. And it is, which of the following activities most likely would not be an effective internal control to reduce the risk of errors in the billing process? And again, we have four choices. Go ahead and study those choices. Stop the video when you're ready. Restart the video and review the answer slide. Okay, let's take a look at the answer to number 9. Which of the following activities most likely would not be an effective internal control to reduce the risk of errors in the billing process? And in this case, out of the four responses, the correct answer is D. Reconciling the control totals for sales invoices with the accounts receivable subsidiary ledger. Now, if we take a look at D, the reason for this is the accounts receivable subledger contains basically the continuing accounts receivable balance of each customer's accounts receivable activity from inception. In other words, beginning balance plus additions minus payments equals your ending balance, which equals your beginning balance again. But in this case, the sales invoice totals only represent the totals only for the accounting period, which are basically the invoice totals that are being posted to the accounts receivable ledger. If we take a look at A, B, and C, if we take a look at A, comparing control totals for shipping documents with the total of sales invoices, this process will help ensure all shipments are billed, meaning that it will increase controls over the billing process. B, using computer program controls over invoice pricing and math accuracy. That obviously is going to, if we're going to use computer controls to help improve invoice processing and verify math accuracy, that's going to increase the accuracy in the billing process. In C, basically matching shipping documents with the sales order prior to preparing invoices. And again, that process is going to help ensure all sales orders were shipped as part of the billing process. So items A, B, and C will actually reduce the risk of errors in the billing process. Okay, let's take a look now at question number 10. Which of the following could result in a misappropriation of cash going undetected if the same individual collects cash for credit sales and also you're given several additional duties? Would that, and if the individual collects cash for credit sales and 1, records credit sales in the general ledger, 2, post those sales to the subsidiary accounts receivable ledger, subledger, authorizes shipments on credit, and lastly records cash receipts. So if an individual collects cash from credit sales, what other two combined duties along with that would allow them to collect cash, and the collection of cash would go most likely go undetected? So again, look at the combinations of duties. Stop your video, and when you've made your selections, restart the video and take a look at the answer to question number 10. Okay, the answer to question number 10, which of the following could result in a misappropriation of cash going undetected if an individual collects cash for credit sales, and also there's 4 separate duties? So what we need to do is find the right combination of duties. So if we take a look, the correct answer in this case would be, and I don't have it underlined, but it would be A, which would be basically collecting the cash, and then Roman numeral 1 records the credit sales in the general ledger, and number 2 posts those credit sales to the subsidiary ledger. And the explanation is if the credit sale is never recorded in the general ledger, accounts receivable control account, or the subsidiary ledger accounts receivable account, it will basically be as if there was really no credit sale on the books. And what'll happen is that there will be no discrepancy between the accounts receivable control account, the accounts receivable ledger, and the accounts receivable subsidiary ledger accounts. Now, if we look at B, C, and D, those combinations would basically not, well, let's go ahead and explain. In each circumstance, cash could be misappropriated, but the individual's ability to post to both the AR general ledger account and the AR subsidiary account would result in a reconciliation difference between the AR sub-account totals and the AR general ledger account. So with that, let's take a look at question number 11. For proper internal control, when customer checks are received in the mailroom, a copy of the remittance listing should be sent to. So again, examine the answers and stop your video, and after you've stopped the video, after you've arrived at your answer, restart it and review the answer slide. Okay, the answer to number 11. For proper internal control, when customer checks are received in the mailroom, a copy of the remittance listing should be sent, and this should be sent directly to A, accounts receivable to update subsidiary accounts receivable records. B, it says the client's bank for the bank. We should basically the remittance listing should be sent to the client's bank of the customers, or the client's bank for the bank to confirm the deposits to be made. And basically, banks really don't perform that function. It's up to the client to do that. C, credit manager to follow up on collections. See why well, it could be nice. It has nothing really to do with internal control. And then D, billing to offset invoices before they are mailed out. Actually, this would cause a series of additional internal control problems that are probably too complex to get into for this one particular question. Anyhow, the answer to 11 is A, accounts receivable to update the subsidiary records. That way the subsidiary records will be updated independently of anybody else in the process. Okay, let's go on to question number 12. Which of the following controls would prevent the misappropriation of cash by employees? So again, study the answers, stop the video, and when you're ready, restart the video and look at the answer slide. Okay, let's take a look at the answer for number 12. Which of the following controls would prevent the misappropriation of cash by employees? And we start out with the correct answer, by the way, is C, a bank lockbox system. And basically, the bank lockbox system is where a customer sends all the checks or the remittances to the client and the client's bank, and the client's bank then automatically deposits the remittances and sends a copy or a listing of the remittances to the client, so the client can go ahead and post those remittances. So selecting C basically would mean that the employees have no access to the checks. If we take a look at A, if we do monthly bank reconciliations, that's well and fine, but the truth is that when money comes in, cash could be withheld from all company records, and bank reconciliations would still balance at the end of the day. Uh, Probably the difference would be eventually noted in a reconciliation between the accounts receivable and the accounts receivable control account, but that may take some time. B, if the employee is the same individual who receives the cash and prepares the remittance advices for the company, that check would not be included on the remittance list, nor the cash receipts journal, basically the difference would eventually again be noted in a reconciliation between the accounts receivable control account and the general ledger account, but again that would take time. D, if the employee is the same employee who receives cash and prepares a remittance list, the employee could conceal theft by not including the deposit on the remittance list. The check would not be included in the bank deposit or the remittance list then. The difference would eventually be noted again in accounts receivable and the accounts receivable control account, but again that doesn't provide an immediate control. Okay, let's go on to the final question on internal control over sales, question number 13. An online sales order system has the following advantage over a batch system. So this goes back to our batch versus online processing slides that we went over also in our class. And again, you are given for a selection of 4 answers. Go ahead and study those answers. Stop the video, and when you're ready to make your selection, or when you've made your selection rather, go ahead and restart the video. Okay, number 13, an online sales order system has the following advantage over a batch processing system, and the answer is C, processing sales information immediately. So things are updated in online systems, in the classic online systems, transactions and databases can be updated in real time. So if we look at the classic online sales system with C, when an order is input, it goes into immediate processing. A, B, and D are really characteristics of both batch and online systems. So with that, that is the end of this video to go over the multiple choice questions, or the remainder of the multiple choice questions for our class of February the 13th. And again, thank you for your time.